you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and here with me today is Portfolio Manager for Morningstar, Cyrique Bourbon. Hello Cyrique.
Good morning, Emma.
So we're here today to talk about property investment trusts. You hold some of these in your portfolio. Why are closed-end funds more suitable to hold illiquid assets such as property?
So the main difference between closed-end vehicles and open-end vehicle is obviously what happens in terms of cash flows, and a closed-end vehicle effectively being a company has a capital structure which is much more steady, much more stable. Open-end mutual funds obviously suffer from in and outflows from investors, and obviously this affects the underlying investment directly.
And open-ended funds came into trouble, property funds, in 2008. Everybody wanted to take their money out. And of course, you can't liquidate a house like that. Anyone who's tried to sell a house in the UK or anywhere knows that. But a closed-end fund, you have to have a buyer and a seller, and it stops those, as you say, mass outflows at times when perhaps people want to take their money.
That is correct. Obviously, the big thing to remember is that you can still get hit in a closed-end vehicle when you're trying to sell some shares at a time where the asset class is out of favor, because there might not be buyers at the price you're willing to sell those shares, effectively meaning that you get the price of the trust moving from potentially a premium to net asset value to a significant discount to net asset value. So in times like 2008, yes, you can definitely sell your shares, but you can potentially sell them at 20 or 30% cheaper than the underlying value of the property book.
And what what property investment trusts have you got in your portfolio at the moment?
So we currently hold the F&C UK Commercial Property Trust, which is one of the biggest trusts in the sector. And we've got two smaller positions in smaller vehicles, the Schroeder Real Estate Investment Trust and F&C UK Real Estate Investment Trust, which are more invested in smaller properties and slightly higher yielding properties, some of them more exposed to kind of non-prime areas of the property market.
Because 2014 was a really good year for commercial property, and a lot of funds, both open and closed-ended, saw great increases in their value. Looking at 2015, we can't really expect the same again, can we?
No, we can't. And the roughly 20% returns from UK commercial property that we saw last year definitely seem unrealistic to expect this year. However, we're thinking that given the current yield levels, there's still relatively easy environment in terms of borrowing, and also the potential for rental growth. With yield at about 5.5% currently, you can expect roughly about half of the total returns for 2015 to come from income and half from capital growth. So potentially about high single-digit, low double-digit returns for the asset class. The one thing to remember going back to investment trusts is those vehicles typically price in ahead of the moves, those potential significant returns. So a lot of the property investment trusts do trade at a substantial premium to net asset value. So for instance, the F&C Commercial Property Trust trades currently at about 17-18% premium to the latest net asset value, which is the end of December one. So there's definitely a lot of expectations built in there already. So we're quite cautious overall in terms of using investment trusts. And in general, the liquidity that has gone into both closed-end vehicles and open-end vehicles means that there's potential for potential liquidity issues to come back into the asset class. So we'll be slowly taking profits into those positions in the coming weeks and months.
So income assets are expensive, no shock there.
There's a lot of demand for income, and that's valid for bonds, for equities, and obviously for property, which has been a key theme and very popular asset class in the last couple of years.
Cyrique, thank you very much.
Thanks for having me.
This is Emma Wall from Morningstar. Thank you for watching.